If you're an Nvidia employee with RSUs, this video could save you hundreds of thousands, maybe even millions of dollars. We're going to walk through 4 different strategies for handling RSUs over 10 years and examine which one performs the best using real market data and tax laws. But first, a quick note about who we are. At TechView Wealth Advisors, we work exclusively with high-performing tech professionals like yourself. My partner and I are former Wall Street institutional equity analysts. We've seen what happens when brilliant people mismanage their compensation, and we're here to make sure it doesn't happen to you. Here are the 4 strategies. Option 1, do nothing. Option 2, optimize for taxes only. Option 3, optimize for taxes, cut concentration risk, and conservatively diversify. Option 4, optimize for taxes, cut concentration risk, and invest in higher returning assets. Now, I know all this might sound like a bunch of boring finance geek speak, but the sad truth is you can be an extremely talented tech professional, the best of the best, and still end up wondering why less talented peers are retiring early to a life of luxury while you continue to toil away. For our analysis, meet our hypothetical Nvidia employee, hired in 2015, just before the stock went to the moon. Initial on-hire RSU grant, $200,000. 5 years later, big promotion with another $300,000 in RSUs. Then another $100,000 in RSUs in each of 2023 and 2024, for a total of $700,000 in RSUs against the backdrop of one of the greatest stock runs in market history. So what should she have done with it all? Let's find out. Option 1, do nothing. No advisor, no strategy. Just watch the stock rocket. Sounds great until it isn't. Every dollar of her wealth is riding on one company. A piece of bad legislation that passes, a tariff war, a chip export ban, and suddenly she's going from looking at early retirement options to unemployed and financially drained overnight. And then there's a tax bill that she's been ignoring. By 2025, she's sitting on $50 million of capital gains, but owes the state and IRS $17 million in taxes. Net of taxes and adding back the initial RSU values at vesting, she's worth $36 million. Not bad, but she got lucky, and luck isn't a strategy. RSU plan number 2, tax optimization. This time, the employee sells shares as they vest. At TechView Wealth Advisors, we encourage our clients to sell their RSU shares when they vest, as there's no tax consequences since there's no capital gain. This frees up money for living expenses, which in turn frees up salary for something far more powerful, tax-sheltered accounts. She maxes out a mega backdoor Roth in her 401k. She and her husband each fund backdoor Roths. And at TechView Wealth Advisors, we even like to fund Roth accounts for kids that are doing real work. So she funds each of her kids' Roth IRAs with money they make from the family business at $250 a month. That's $3,000 a year. And she also maxes out the family HSA. In Plan 1, the employee assumed that she was maxing out her 401k by funding only up to the elective deferral to get the maximum amount of money from her company's match, when in fact, she wasn't anywhere close. Now she's funding beyond that point with after-tax dollars in Roth accounts both in and outside of her 401k. The result? Investment gains in these accounts can be shielded from taxes forever. Over 10 years, she managed to protect anywhere from 20 to 50% of her RSU compensation from capital gains tax every year. How much better off was the employee using this tax optimization strategy? Well, to answer that, we're going to assume that the employee continues to only invest in Nvidia shares. Now, this is something I would never recommend to a client, to maintain such a high exposure, basically all of your wealth, in one company. But at least this way we can see how much wealth is generated through tax optimization. As in case 1, she generates $50 million in capital gains, but this time she only pays $12 million in taxes, leaving her net wealth at $40 million, which is essentially a $4 million savings. Far better than option 1. RSU plan number 3, tax optimization plus diversification. This time the employee decides she wants to do much more with her RSU plan than simply optimize for taxes. She also wants to diversify that heavy risk she's wearing with Nvidia shares. So what does she do? She listens to Warren Buffett for the average investor, basically invests in an index fund. So just like with option 2, she sells her RSUs as they vest, funding her living expenses, freeing up her salary to max out those retirement accounts with any extra money going into a taxable brokerage account. And this time she invests in the popular SPDR S&P 500 index fund. So how'd she do with plan number 3? Well, just like in plan number 2, she minimized her tax burden. But as you probably guessed, the S&P didn't perform anywhere nearly as well as Nvidia did over that 10-year time period. Her wealth net of taxes, just $4.2 million. At TechView Wealth Advisors, we like to invest in stealth monopolies that dominate globally. There are about 10 such companies that have in the past often outperformed the market. RSU plan number 4, tax optimization plus stealth monopolies. What if the employee decided instead of investing in the broad index, she would invest in an equally weighted portfolio of the Magnificent 7, dominant cash-generating companies that are leading their industries? Well, she'll cut her taxes, she'll increase her diversification for sure, and she'll be investing in companies with economic advantages so high that the odds of success are skewed in their favor. Her wealth after 10 years, $11.4 million. That's double the index fund strategy. Of course, it's still well short of the do-nothing moonshot, but without the single stock Russian roulette. The scoreboard. Bottom line, plan 2 generating an extra $4 million through tax optimization clearly wins, but not when you consider risk. You got to ask yourself, what's the probability my company stock sees a 184-fold increase over the next 10 years? On Wall Street, we have a saying, pigs get fat, hogs get slaughtered. The smart play, plan 4. Lower your taxes, cut your concentration risk, and invest in companies built to dominate. So you're convinced of the right RSU strategy, but perhaps you're sitting on a mountain of companies stocked with embedded gains. Don't worry. We help people just like you unwind large positions over time, taking into account tax timing, as well as fundamental and technical factors associated with your stock, and, of course, geopolitical risk. Let's talk. Found this helpful? Hit like and help other Nvidia employees maximize their RSUs. And finally, here's a parting gift, the disclosure slide. Thanks for watching.